Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. I want to welcome all our friends who are following us on all various social media platforms, Twitter, StockTwits, Facebook, and obviously our friends on YouTube. First and foremost, I want to send out a condolences to all the families that were affected by that horrific, I mean, what do you want to call it? You want to call it a murder, a horrific murder in Pittsburgh. If you guys haven't heard, some lunatic ran into a synagogue and killed like 10, 11 people. Just absolutely crazy. So whether you made money last week, lost money last week, or just couldn't get going, you got to look at the bright side. We're blessed, man. If you're, and I say this all the time, it's the little things in life that you really appreciate life. We're blessed. If you're watching me right now, if you're listening to the gibberish that's about to come out of my mouth, right? The stupidity of the biggest idiot in the world, right? You're blessed. I mean, you're blessed. Whether you made money, lost money, you're blessed here. Everything else is a cherry on top. So we definitely want to send our condolences. And again, it's just so easy to be a human being. It really is. It's so easy to be a human being, but it's so hard to really achieve that for, unfortunately, a lot of people. So welcome aboard, everybody. This broadcast goes out Monday through Thursday to our good folks in our live webinar. Okay, and obviously we put it up to the public on the weekend. So let's talk about the markets. Okay, absolutely crazy week. This is 2 weeks in a row. What I love about the YouTube platform, and years ago, if you wanted to kind of jot down the history of your progress. Okay, you kept a journal. I still know people who keep journals, kind of document their journey, where they started, where they wound up. What I love about the YouTube platform is you can chronologically really put your journey out there, and if you look at what the market has done just in the last month, okay, you could really see and understand and appreciate where we came from and where we are now. And if you go through all our videos, just like in the last 3-4 videos, since all this pullback has started, and it all started out so innocently, right? It really did start out so innocently with this double top, right? We had this whole video on the double top, and we talked about, listen, this is not Armageddon. Until it becomes a problem, it's not a problem. And then things started turning, right? Things started turning pretty aggressively, very, very quickly. We started losing major support. We started losing the 50-day moving average. We started losing the 100-day moving average. And I say this all the time, that this is the only business in the world when things go on sale, people don't want to buy, right? People don't want to buy. And you can see that by market structure. Kind of, we'll talk about that in a few minutes. But what we've seen and really appreciated how technical analysis in its most raw, basic form, it really works. I mean, it really, really works very, very well. And if you're a new trader right now, okay, and unfortunately your only exposure to the stock market, to trading, is what you see on social media. So you really have to kind of swim and navigate through all these channels to go through a lot of, really just bad information. I mean, let's be honest, just really, really bad information to get some good value, okay? But once you simmer through and you realize, certain content is really good and certain content is really garbage, it makes you really appreciate how good technical analysis is. And from the time that we started, from the whole double top on the NASDAQ 100 to even going back to last week's video, in last week's video, we talked about, well, why was it important that we closed below the 200-day on S&P cash? Like, what can it possibly lead to? And unfortunately, so many traders, they're so sensitive, right? They're so sensitive, and they believe in labels, and they believe in all these technical words. They miss the big picture, okay? When I started trading, we were either in a bull market or we're in a bear market. Now because society is so sensitive, right? Just to give you an example, yesterday I was in my son's basketball game. Okay, they were down 14-1. Okay, 14-1. And one of the parents next to me, okay, and these are 11 and 12-year-old kids. These are not 5-year-olds that you have to encourage, 4-year-olds you have to encourage. These are 11 and 12-year-old kids. And the parent next to me is saying, "You guys are playing great. You guys are doing great. Keep it up." I look at the scoreboard. I go, "We're down 14-1. I turn to the parent. I go, "What are you smoking?" I started laughing. I didn't do it in a vicious way, but I go, "What are you smoking?" So people are so afraid of reality, so afraid, to really embrace a picture that something is wrong. It really affects their mind, okay? And all you need to do, is to stir up a response, especially on social media. Say the word bear market. Take a step back and say the word bear market. Oh, no. This is not a bear market. This is not a bear market. We're in a correction. We're in a correction. Listen, okay, I'm a grown man. Okay, I've been doing this since I'm 25 years old. I'm 44 now, okay? I don't care what you call it. You put a lipstick on a pig, it's still a pig. Okay, just really think about this. If it makes you feel better at night, okay, going to sleep saying we're only in an area of a back testing phase, okay, if that makes you feel better, if that's what you can justify by looking in the mirror and look at your exposure in the marketplace, that's fine, okay? That's fine. It's good. If you want to use the word correction, use the word correction, right? It's all good. You need to justify. I don't need to justify anything. You need to justify. You have to look yourself in the mirror and say, is my approach, right, put on a pedestal that it's so out there that I can justify a recovery or, a correction, that I can justify a bear market. For me, it's a bear market, right? For me, it's a bear market. When you have good news and stocks are being sold off, it's a bear market. When you have your leaders being sold off in earnings, it's a bear market. Every single time we have the opportunity to kind of reclaim, right? Reclaim sentiment, we stall out, we fail. Every single time there's a rally, right? Last 30 seconds, we fail. So what is that, right? You want to call that a correction? Okay, I call it a bear market. Until stocks stop going down, right? Until stocks stop going down. We'll get to that in a few minutes because we might be kind of there, maybe. We'll get to that in a second. But until stocks stop going down on bad news, okay, consider it a bear market. Okay, that's the whole point of a bear market. Stocks go down after a hiccup of going up, right? They can't handle prosperity. They can't reclaim levels. That's what a bear market is. Again, maybe that's not technically, right? Maybe again, that's what you want to call a correction, but that's a bear market, okay? And we saw that day after day after day. Bulls dropped the ball again this week, especially on Friday. We'll talk about Friday in a second. The Bulls dropped the ball. Okay, we had the makings of capitulation. We had the makings of throw the baby out with the bathwater. Google actually went green, right? And then the market failed again. And bears took control, and the market started selling off. So labels are cool, right? Labels are cool. Like again, for example, I'm the king of the idiots. Nobody will ever turn around and say, "Well, Dan, you're not the king of the idiots." Well, yes, I am the king of the idiots. But again, you don't need to be the sharpest tool in the shed. You don't need to be the smartest trader in the world. You just can't be the dumbest. And the most important part, and we say this every single week, is collect the data. See what's in front of you. Your eyeballs are not going to lie to you, right? Men lie, women lie, right? Your eyeballs are not going to lie to you, okay? The facts are facts, okay? We are selling off. We are selling off in every single attempt that we start to navigate the markets higher. And every single time, again, that the bulls try to reclaim any certain substance, right, in any form of rally. The rally lasts for 45 seconds, right? You guys are trading the markets. The rallies last for a couple of minutes, and the next thing you know, they hit supply, and then just absolutely bids start running away like cockroaches when somebody turns on the lights. And again, that's called market structure. When you see wider spreads, when you see thinner bids, that means there's lack of active participants. Retail does not want to buy the dip. Okay, I'm telling you, retail does not want to buy the dip. Well, again, you could be long Netflix, right? And 30 seconds later, literally 30 seconds later, it hits supply. The stock goes down $4. We see that for the last 3-4 weeks. So how can you justify a correction phase? We are in a bear market. Again, Dan, you're an idiot. Yes, I am an idiot. Absolutely. King of the idiots. But again, until stocks, and this is a very, very important point, and yes, I'm repeating it again, until stocks start going up on bad news or good earnings or even earnings that meet expectations stop going down, consider this a bear market. Reality, 4% down, NASDAQ 4% down on the S&P. The Dow fell 3%. Again, scoreboard doesn't mean anything. It's all about the action. Very, very aggressive action, right? Incredibly aggressive action. Not the easiest week, of course not. Again, the spreads are wide. My liquidity this week was kind of tough. Again, when you're trading Amazon and it's a $2-3 spread, right? And there's 100 share lots, it's very, very tough to get full size on anything. So you have to trade smaller. For the last 2 weeks or so, I've been really hammering the point home that you have to trade quarter to half size. You have no choice. How can you go full boat on Tesla if Tesla's spread, if Tesla moves are so exaggerated that if you're wrong, if you get caught a reload seller, reload buyer, you're dead. How can you justify going full size? So just like any high performance automobile, you're going to drive, for example, you're going to drive a Bentley GT, right, a lot more aggressively on the Autobahn than driving in Midtown Manhattan traffic at 5 o'clock, right? You have to change speeds. You have to act accordingly. You have to adjust to where your market conditions or driving conditions are at a current point. So I've been trading quarter to half size on every position for the last 2.5 weeks, and it's been fine. It's been fine because the moves, when you catch them, they're so exaggerated that it's almost like you are at full size. You just need a bigger move. The problem with that, right? The problem with that is what we've seen is the moves are not, they're not sustaining as usual. So for example, in a normal, right, again, what is normal, but in a normal environment, right, if you're long Netflix, you could sit in a trade for an hour, 2 hours, whatever the case may be, because a trend is being confirmed over and over again. When you're dealing with a market like this, you could be in a position for 35 seconds. It goes up $1, $1.50, $2 your way. You scratch your head, you're down $2 in the position. That's how fast the market is. So you have to make aggressive choices. You have to think faster. You have to react quicker. But that's the tape we're in. The good news is, I started to see some encouraging signs, encouraging signs from Friday's session. Let's talk about that for a second before we talk about the pivots from Friday. If you guys remember, about a month ago, for all you guys who've been watching this channel, we started talking about the roundabout top. And what a roundabout top was, when you saw the Qs, kind of top out here, 187.50. You can see these two candles right here. When the Qs started topping out at 187.50s, I started noticing things very, very quickly. Stocks like Amazon and Google and Netflix and Alibaba, they couldn't rally anymore, right? They just couldn't rally. And this was the same time, if you guys remember, the banks, and I think it was I'm pretty sure it was the same time. This is when the banks put up a really big 3-day run. You can see here Goldman Sachs. It really put up a big 3-day run here. And the one greatest thing about the market is, again, your eyeballs don't lie. So when the leaders, or at least the stocks that I trade, Amazon's, Netflix, Tesla, stuff like that, when they can't go up as the market is about to take out all-time highs again, and the biggest crap, and by the way, no disrespect to the banks, but again, does anybody really care about the banks anymore, right? Just from the trading aspects. I know, Dan, you're an idiot. Banks are awesome. Banks are the best. Yeah, okay. Anyway, so when you see Amazon can't rally when the market's about to take out all-time highs, when you see Netflix can't rally when the market takes out all-time highs, right, and they start diverging, right, and there's a big, big disconnect, Dow stocks going up, right? NASDAQ leaders starting to move forward. That's the early signs of a roundabout top, right? Again, remember, it's good stocks, right? Good companies in a good environment. They can't rally, okay? That's a red flag. It's a very, very quick red flag. And slowly but surely, we started seeing the disconnect. And this is 3 days in a row that the Dow was up 250 points and these things couldn't rally. Okay, that's a roundabout top. That's a roundabout top on the NASDAQ 100. And next thing you know, again, we said, hey, we're not calling for Armageddon. We're just calling for a back test at that point. We got the back test. And we started seeing the same similarities over and over again until finally, swan dive and blah, 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 right? We kind of know where we are now. Here's the good news, right? Here's the good news. And I say this all the time, especially to new traders. I'm not a bull. I'm not a bear. Okay, I'm not a bull, not a bear. Don't care which side I'm trading. I trade ranges. Okay, so you can tell me about Amazon's going to 3,000, it's probably going to 10,000. If you want to tell me Tesla's going to 0, it might go to 0, it might go to 1,000, right? I don't care. I don't care. It doesn't make a difference to me, okay? My edge is within these 60-minute channels. These are the 60-minute channels, and these are my edge. Stocks go from demand to supply to demand to supply to demand to supply, rinse, repeat, rinse, repeat. That's all I care about, okay? So my opinion of the overall market means absolutely nothing. I look for discrepancies on the macro, and I look for very, very specific arbitrage on the micro. Okay, that's how I make my living. That's all I do. I don't care about you turning around and say, well, you know, Amazon's going to be at 3,000. You're crazy if you're selling the stock at 1,650. Well, I'm not crazy selling the stock at 650 if the stock confirms the stock goes to 1,600. That's called the arbitrage. That's my edge. But we are starting to see, for all you perma bulls out there, we started to see a little bit of the light at the end of the tunnel. Okay, the light at the end of the tunnel. We saw the capitulation. In my opinion, I thought it was capitulation on Friday. Okay, we started seeing stocks like Google that were down, you know, $60, $70. We saw Google at one point on Friday go green in a day. Okay, we saw Google go green in a day. It was actually up like $13, $14 at one point. Went red to green and it's kind of sold off till the end. But again, we started seeing early signs. We started seeing early signs of a potential. You know, I'm not saying it's going to be Monday. Roundabout tops and roundabout bottoms don't form within one day. They don't form within one trading session. They form over the 3, 4, 5, maybe 8-day period. And the key for Friday's session, what I saw was Google went green, right? Netflix got stronger. NVIDIA got stronger. We'll talk about Tesla in a second, which was just an absolute monster. Okay, we started seeing all these things get stronger. Amazon, way off their lows, right? Amazon, way off their lows on a 60-minute interval. You can see this in a second. We'll talk about the pivot, specific pivot on this one that we had in the room as well. But you started seeing all these stocks that were hammered from the original rounding top to starting to slowly but surely stop going down. If you look at all the 60-minute channels, you can see like Amazon's way off their lows, right? If you look at Google, for example, right, way off their lows. You can see NVIDIA, for example, right? You go through all of them. For all you guys who trade beta, you could go through all of them one by one by one. Even Alibaba, who can't get out of its own way, well off their lows, right? Well off their lows. You're talking about $5, $6 off their lows, and almost, and you can see here from the visual, and this is kind of where I'm getting to my point. You can see how close they really were to busting out back to the upside, right? So I kind of figured on Friday they were going to trap some late day shorts, okay, and kind of give them the feeling maybe into Monday's session that everything's okay. Maybe it will be for them. But I'm going to start looking for some signs come Monday morning that we potentially could start turning around, okay? We got to look for signs. We got to take a look at what happens when the futures sell off. We want to see what these core stocks are doing. We want to see if Google doesn't go down. We want to make sure that Netflix doesn't go down with the futures. And if we can start getting 1 or 2 days worth of that type of confirmation, then maybe we could start seeing a slow rounding bottom. And I'll tell you this right now, for all you guys who have never traded off a roundabout bottom, I think the last roundabout bottom we had was in 2016, right? If you guys remember the destruction, that first quarter, I think it was January and February of equity prices in January 16. Actually, let me just show you guys really quickly here. So here are the Qs. Here are the Qs. Let me just show you. Right. So 2016. Here's 2017. Right. So here's here's January of 2016. This is the last roundabout bottom we had. And you can make an argument this was the bottom, right? Like this was the bottom. And the one thing when you're trading off a roundabout bottom and you kind of confirm it because your stocks just stop going down and they start confirming daily channels, you could really start holding a book, right? So you don't need to day trade. You could literally hold a book. Because when Amazon, for example, goes from 2,000 to 1,500, right? 2,000 to 1,500, and it starts bottoming out somewhere 1,600, 1,700. Yeah, you could take it for, a multi-week swing. It's a very, very different situation. So a lot of traders, you guys have really never seen a roundabout bottom. The greatest roundabout bottom in my generation was 2009 when we really hit rock bottom during the mortgage mess. So it's something pretty exciting, especially for all you swing traders, option traders that we potentially could be getting into. So that's something we want to go into this new week. Kind of be conscious that this could happen. We're looking for signs. We want to make sure that the bulls stop going down and stop the bleeding. Let's talk about Friday's session. Crazy aggressive session. Thursday and Friday were insanely aggressive, really, really aggressive. I traded Tesla 7 or 8 times in the last 2 days. Just absolutely sick. Friday, I mean, Tesla's always my favorite stock, but Friday was like the motherload. I mean, the motherload for all you guys who traded Tesla, not even just in the live webinar, just everywhere. I mean, you saw how insane it was. So let's talk about Friday's session. And again, this is why it's so incredibly important, right, guys? It really is incredibly important to understand technical analysis. Okay, it really, really is so important. I really can't emphasize enough. And again, I know I repeat myself with this thing, but the longer you hear something like this, it's going to finally get into your mental Rolodex. And when you really embrace it, it works incredibly well. So pre-market, you can see the time here, 9:21 Eastern time. Tesla, for all you aggressive traders, 311.50, 312 is a sneaky area. 316 is huge, right? 316 is going to be huge. And again, I say this, the greatest thing about this pivots, and because of the PS60, I used to call it the PS60 theory. It's a PS60 process now. If you look, it's not a theory anymore. It works pretty well. So here was Tesla. Here was Tesla, and this was the sneaky area right over here. Okay, this was the sneaky area. Actually, excuse me. This was the sneaky area right here. This 311.50. This is the highest candle into supply. So this is the sneaky candle, and this is what we talk about, this sneaky pivot, right? Most traders, if you've been following me on YouTube especially, and most traders, they don't know these channels exist. Okay, they look at up here and they look at down here, but they don't know these bread and butter, or actually steak, right? Steak, the meat of the trade, exists in supply. And we talked about 311.50, 312, that's the sneaky candle. Here was your macro candle right here, 316. You can see here at October the 25th, 315.99. So you had your macro confirmation channel. You had your sneaky candle here at 311.50, at 311.50, excuse me, 311.50, 312. So the stage was set. And slowly but surely, you can see the first move here, just an absolute monster, right? It takes out 312, takes out 316, and puts in a high of 322.76. Just an absolute monster move. And again, it's technical analysis. There's no tricks. Nobody's trying to trick you. Your eyeballs, again, men lie, women lie, your eyeballs don't. It's all technical analysis. And this was one of the most aggressive candles that I've seen in a long time, until the next aggressive candle that I've seen in a long time. So now we know, right? Now we know this 322.76. Again, it's not the high, it's not the low. We know this 322.76 is going to be the monster, right? That's going to be the monster. And we also know, right, 332 was the after hours high of Tesla. We know that. I mean, we know these levels. So you know 323, you know 332. So for all you option players who played this, I mean, phenomenal score. Forget about the 312. Now you're talking about a macro event that if it gets confirmed, you can have a firestorm, an absolute firestorm of shorts. Again, I don't care if you like Tesla, don't like Tesla. Facts are facts. Technical analysis is technical analysis. And here was the candle that, I mean, really, so you can see here, right here, I even tweeted it out. So 1150 could get to the 1960s. It overshot the 1960s. Really, I mean, really overshot the 1960s. Again, 1150 went to supply and just overshot it. That's how strong Tesla was. But here was the, here was the knife. Here was the absolutely knife. We'll talk about the Qs in a second, but here's the knife to, to the throat of the shorts. So I tweeted out, maybe this was an hour later, 323 is the day's high and also another sneaky channel. It could be aggressive measured later. Okay, if you look at the point of interest, right, we're referring to the 60-minute chart, you also have 325 and then 332 potential, and just an absolute rock star move. I mean, really rock star move. It went from 323 to 325, to took out the 332 and went to 340. Guys, congratulations for all you guys who hit this trade. I mean, again, you don't need millions of trades. You just really don't. You don't need millions of trades. You just need the right ones, the stocks that you feel comfortable, and make sure that you are trading and you're allocating proper tier size. Here's another, here's another, decent trade. I know a lot of you guys caught this. QQQs 1024 lows were 165. That was the line in the sand. That was the area that if it confirmed, it was going to give you at least cash flow. Again, we don't know how big these pivots are going to be. Sometimes they could be dollars, sometimes they could be 40 cents. You just don't know. That's why you always take money on the way up, on the way down, and you just break even as you stop, because again, you need to be proactive in this market. You can't be a deer in headlights and let the market dictate to you what your next move is. I say this all the time. Sell when you want to, not when you have to. It's a very, very basic premise, but it's incredibly important for every single trader. So you can see here, 1024, 165 line in the sand. Here are the Qs. You can see the trade here. Here are the Qs. 165 line. Where is it? 66, 60, 66, 66. Where was the line here? Okay, so 65 here. Sorry, here it is. So here's the 65 line in the sand. It broke 65, went all the way down to like 63.80s. I mean, $1 and change move on the Qs. If you do trade the Qs, you know how impressive a dollar move is. When you see something exaggerate, $2, $3, it's really majestic. So, nice move there for all you guys who caught that as well. And then things started getting pretty aggressive. This was kind of a big one, and for all you guys who did catch this. And you could see, again, you could see why technical analysis works. I took a snapshot of this and I said, hey, everyone, you see how it stopped twice at 1648? You can see there's two candles here. If it could reclaim the 1650, it can go. And again, if you look at Amazon, right, if you look at the 60-minute channel on Amazon, here was the two candles we were referring to, right? So you had 1647 change, 1647 and change, all right, 1648. So if it reclaimed, right, if it reclaimed 1650, it can go. Look at the move. I mean, 1650, again, stocks go from supply to supply. This thing went from 1650 almost to 1700. I mean, just an absolute sick move. Congratulations for you guys who caught that as well. And then you just started seeing just things get better and better and better. Again, you don't need to be in the markets 100 times during the day. Just wait for these confirmation channels. Roku, right? Roku. This is at 10 o'clock. Roku. 53 needs to build if the market bounces later. Here's the Roku channel, right? Here's the Roku channel as well. Here's the high right here. The highest candle into supply, which was 52.96. And it broke 52.96, 53, and it went to 54.18. Again, you don't need the biggest moves. Channels are there to be confirmed. All you need to do is wait. Obviously, this is me being an idiot with Jeff Bezos. And Square, again, 72.40 needs to build. Again, if the market bounces later. Here was Square, right? Here was Square. Here was the highest channel, 72.40. Once it confirmed, again, if you believe that stocks trade from channel to channel, supply to supply, and demand to demand, here's your trade, 72.40, and it went to almost a buck move. So into supply. But you could quickly see, again, kind of to my point, what happens when these things hit supply instantly, because again, we're in a correction or bear market, whatever you want to call it, how fast they go right back down. So it's so incredibly important to understand where all your supply zones last. So very, very aggressive day. I mean, very, very aggressive day. The week was pretty good. I mean, the week was pretty good. Again, I'm still going into this week. I'm still going to continue to trade quarter to half size, just because for me, stocks like a Tesla or an Amazon, they're trading wider. They're trading much more aggressive. They're trading with thinner spreads. So sometimes for me, it's hard to get liquidity. I almost have to put in a limit order above the market, to get extra liquidity. It's tough. For all you guys who trade these stocks, you can see it's very, very tough. Like I had a trade, just to give an example. I had a trade on, was it Tuesday? I think it was Tuesday or Wednesday, that Tesla was trading so aggressively. On the pivot, I got filled on 38 shares. Seriously, I got filled on 38 shares. And 45 seconds later, it ran up $2.50. And as you can imagine, I was kind of livid, right? But that's kind of my point. The liquidity aspect is crazy, okay? It's crazy. So I try to do my best, put limit orders above the offer. That, if I feel the pivot's going to confirm, it's going to go aggressively. You almost have to put in a limit order above the market to kind of sweep up all the liquidity, all the liquidity up there, because that's the scenario we're in. That really is the scenario we unfortunately are in, until more active participants will come back into the market, and that's when you start getting obviously a lot more liquidity. So going into going into tomorrow's session, you know, I'd like to see, I would love to see a washout. Okay, I'd love to see a washout. I put some specific trades on the email tonight that you guys will see. Obviously, you'll see the option flow tonight as well. But I'm really watching beta. Okay, sometimes you don't need to overthink. You don't need to get creative. I'm watching beta. Okay, if Amazon washes out and goes green, I want to be long Amazon. If NVIDIA washes out and goes green, I want to be long NVIDIA. On and on and on. So I'm trying not to be very creative because we want to see a couple of things. We want to see. We want to see a nice washout. Right, retail completely leaves the building. We'd like to see some option flow, right? We'd like to see some aggressive call buyers into weakness. Like, for example, a couple of days ago on Netflix when we saw that 315 pivot go to 320. Remember those 340 calls? So we want to kind of see a perfect brew, kind of a perfect stew of aggressive waking up. And maybe, just maybe, we could really have an aggressive rally, maybe Monday, maybe Tuesday of this week. But again, it's all contingent upon the market kind of embracing the selling, kind of try to absorb it. So guys, have an awesome weekend. For all you guys who are joining us tomorrow in the live webinar. Again, if you trade beta and you're just missing that edge, guys, I'm telling you, 60-minute channels, the way we trade it is completely different than anybody else trades it. I promise you. I mean, you see this on social media all the time. If you want to understand the moving parts, we do have nearly a 4-hour workshop. It's only $300. We try to make it incredibly affordable for everybody to really understand why these things work and why these things work aggressively. So instead of spending $3,000, $4,000, $5,000 to some random 22-year-old avatar to show you how to set up charts and scan for stocks in a bull market, this is $300. This will give you a foundation for life. Guys, have an awesome Sunday. You're blessed. We'll see you tomorrow. I love you all, and God bless, guys. See you tomorrow.